Farming is sort of like baseball in that you can't just wait for the home run.
Hi once again, everybody. Welcome back to the Comstock channel. I'm Marlin Bohling with you. It's always just a treat to have you with us on these video podcasts. We love talking with you about agriculture and the markets and that sort of thing. And I want to remind you, go ahead and like these videos, subscribe to the video by clicking on that bell icon down below, and share these videos with others as well. Boy, I appreciate everything you've been doing. You have really helped us grow into one of the fastest growing ag podcasts out there anywhere. And it's all because you're helping to spread the word. So thank you very much. Well, today I have Chad Hart with me. He, of course, is an ag economist with Iowa State University. And he's going the extra mile today for us. I hope you can appreciate this because Chad happens to be on the road. He's at a conference, and I think it's fortuitous here, Chad, that I'm able to talk with you because you're actually getting feedback from people out there in the country that, from what I understand, deal with farmers and ranchers on a daily basis. And now I'm curious what you're finding out. What's the sentiment like out there?
Well, they're feeling, they know farm incomes have dropped. They feel that finances have tightened, and that's sort of boomeranging back on them as they look at, these. I'm dealing with folks that are mainly on the ag chemical and fertilizer side. They're looking to sell product to our farmers out there, and they're getting a lot of questions about return on investment and basically having to show, if you will, the bang for the buck. The idea is if we're going to spend these amounts on inputs, we need to see additional output to help cover those costs. And that's a discussion we haven't had to have for a couple of years.
Since the last time I talked with you, I think that was before the planters hit the ground. And what have we had? Corn go down like $1.50 since then. I mean, I'm sure that the projections for cash flow this year have just really changed dramatically, whether you're growing corn or soybeans or even wheat this year. It's going to make it hard on grain producers out there and the whole community is where they live right now.
It definitely does. I mean, as you say, we have watched prices sort of across the board on the crop side retreat through most of 2024. And so, you think back a couple of years ago, we were talking fairly healthy profits. And then with the 2023 crop, we got in around break even. Now, as we're looking at 2024, we're going to be a little bit below break even. In fact, in some cases, with soybeans, we're getting significantly below break even. So farmers are having to tighten their belts, and that's rippling up through the entire ag economy right now. But it is also something that, let's face it, we've been through this before. When you think about the ag cycles of the past, again, very similar to what we saw through those. So it's always the challenge of remembering the lessons from the last time.
I'm sure you're probably getting the question a lot. Everybody wants to know, well, how deep can this dip go? It seems like a lot of analysts tell me, well, it can always go further than you can really tolerate in either direction, up or down. What do you think about that?
Well, that's the deal. There's definitely truth to that statement. I look at this one, I like to compare to against the last downturn we went through back in 2012, 13, 14. And I think, what we're going to see here is probably depth-wise very similar to what we went through there. But I think the duration of this downturn is likely going to be shorter than what we went through last time. And that's mainly because when I think about the demand side of our markets, they're in better shape this downturn than in the previous one. And so that makes me believe that we will pull out a little more quickly than we did last time.
Well, of course, now we're on the other side of the August WASDE numbers that came out, supply and demand numbers. Now that you have seen what USDA thinks we'll have for production and also for ending stocks, now that was a bit of a surprise on some of those numbers there too. What does that mean now as you look ahead toward harvest time and the potential for any kind of a market bounce at all now?
Well, that's the deal. I think as we're looking for a market bounce, no, harvest time is not the place to be looking for it. The idea is not only do we have to deal with the crop that's coming in from the fields, which is going to be record to near record levels, but we're still, let's face it, we're still working through the stockpile of last year's crop as well. And so we know there's going to be a lot of bushels that have to be moving through the marketplace around harvest time. What I'm looking for is once we get past harvest, how quickly can we start to maybe build back in, and I won't say good prices, but better prices given the demand that we have. So, yeah, October, November, I think they're going to be rough. But as we look out towards February, March, April, that demand should be churning through some of that crop at least, and that can lead to some pricing opportunities as we look forward in the next spring.
Have you seen much basis change in your area yet or not?
I'll frame it this way. As far as cash corn, if you're moving it today, no. It's a little erosion, but not tremendous. But as we look at those new crop bids around harvest time, we definitely see things reverting back, not even to normal, but a little bit, worse than normal. We do see more negative basis across Iowa. We've been maintaining positive basis across a lot of the state now for the last year and a half, which is rather unique. This is going back that we're used to more negative basis, but this is going to be deeper than usual.
I did a report about a week ago now, and it was in Louisiana where they're currently harvesting corn. And so as of today, they would have been at it now for about 3 weeks already. I was talking with you before we started recording this, and, I'm located in northern Tennessee by the Kentucky border, and the corn is already turning here. I mean, some of the fields are starting to dry down already. Harvest can't be that far away, and that really worries me that it's, just a matter of days or a couple of weeks maybe to where we'll really see that basis kind of fall apart.
Yeah, well, it's coming. And the idea is, I think, you mentioned it. It's coming very quickly. And it's coming basically as soon as the harvest rolls into that area. Because I think a lot of these companies, let's face it, they haven't had to be real aggressive in buying corn now because they know there's this wall of corn coming in just a few weeks. And that's what sort of puts a cap on where everything can move right now.
I'm really interested to hear from your vantage point. Iowa seems to be the state that has almost everything this year. It sounds like you have some really good yields in some areas that got nothing because they just totally flooded out. They replanted 3-4 times, kept getting washed out, and then they got delayed or prevented planting. How do you deal with your state? How do you even try and calculate what you're going to produce this year?
Well, that's the deal. I think when you look at the statewide total, despite all our problems, in fact, USDA, when they released the report on Monday, they basically said, yield-wise, we're looking at a record on the corn side, a near record on the soybean side. So the idea is that while we have had those struggles, we have had those drowned out spots, we did have replanting, we did have all sorts of issues, that when we add everybody's acreage together, no, there's still a lot of crop even made in Iowa despite the problems that we had there. And then you throw in what's happening with the Illinois crop looking as good as it is, the Indiana crop, and throughout basically the entire upper Midwest, we do see phenomenal crops despite the challenges.
Are you worried about an early freeze in the northwestern part of Iowa?
I am for individual producers, yes. Because when you think about especially those spots that did get drowned out early and they've replanted, they replanted with the same variety that they probably went into the season with, which means I'm looking at a longer season variety, going to need a longer window to bring that one into harvest.
Now, the conference that you're at, it's full of ag retailers, I understand. Are they talking about having to maybe offer more incentives heading into the winter and next growing season just to try and entice some buying, maybe some early buying this time around? What do you hear?
Well, I think you're not only hearing some of that chatter, but some chatter about how, again, sort of how do I sculpt the sales pitch? Where it is more about, hey, I'm asking you to buy this input. Let me show you what this input will do for you. How do you get that return on investment? And really wanting to not just tell the farmers that, but show them how to get it. Because they recognize the idea is that, okay, farmer money is tight right now. They can't afford lost expenses. So I want to make sure that if you're buying from me, you can see that value that you're getting from it.
As we look forward, when we get to the end of this growing season, Everybody's got to think real hard on what they want to do about land valuations and cash rents as we get into this winter. It's going to be time to renegotiate all that. What do you see happening now?
I will frame it this way. I think, unlike the downturns in the past, if you look back at the downturn a decade ago, we didn't see the land value market or the land market at all react quite as strongly as usual to the drop in net farm income. And I'm expecting that same sort of thing this time around. We've seen a little softness in the land market. USDA reported their land values, a week or so ago, and they found them down about 3-4%. I'm expecting that sort of decline as we look out over the next year to 18 months. It could get deeper the longer net incomes remain low, but at the same time, too, there are lots of other things that are helping keep the land market elevated right now. We have seen not only a lot of money come in from agriculture, but a lot of money, investment money, come into agricultural land as well. And that's going to help hold those values up better than usual.
Well, Chad, let me ask you this then. As you get toward the end of this growing season and you look at next year here, is there anything different that maybe producers should be doing in their strategies as we head toward the end of 2024, whether it's maybe locking in inputs ahead of time or maybe doing some different kind of sales strategies? I'm just curious if farmers have really done enough marketing this year compared to an average year.
I'm going to argue they haven't done enough marketing this year. We have seen a lack of forward sales as we've moved through this year. And that lack of sales has actually hurt us. If you think back to like April, May, June of this year, we did have some profitable prices on the board at that time. We didn't take enough advantage of those. So I'm thinking as we're looking forward here, farmers will need to be more aggressive in when they see a profit opportunity, grab it before it disappears again. You mentioned looking for those savings on input cost. Yeah, being aggressive and looking for those and taking advantage of those sales opportunities. So anytime we can control cost, we need to try to do that over the coming years.
You think there's more room for maybe training or education on different marketing strategies to lock something in maybe?
I do, and I also think, this is the time where I tell folks, farming is sort of like baseball in that you can't just wait for the home run. A good marketing strategy has to do with hitting singles and being consistent in your approach at the plate. When we're looking at our marketing, it's maybe making more sales, with fewer bushels, but, giving ourselves more of an opportunity to let the market work for us.
Something that's really hard when it comes to ag marketing is getting over this crying over spilled milk philosophy. Oh, I missed that one.
Mm-hmm.
Oh my gosh, I hate that. But you kind of have to get over it and get over yourself and just reset and come up with a strategy from there forward. You may not ever recapture that. I'm sorry that didn't work, but you can't waste a lot of energy just fretting over that, right?
Right. No, I always tell folks when I make a move in the market, write down why you did it. Remind yourself, this is why I did it. So that way you tend to spend less time looking back and going, oh, I wish I had done something back then. Because hopefully, what you want to do is if we miss an opportunity, write that down again to remind yourself to take advantage of it the next time you see it, as opposed to crying about missing it the first time.
Interesting. Do you think there's any kind of an analog year to what we have seen this year? I mean, is there any kind of a baseline we can go by?
The fear is this is a lot like 13 and 14. And I think a lot of folks are pointing back to that because the last time you saw a drop like we're experiencing now would have been that time. I would caution, though, because I'd say that when you're looking at the demand picture, it's different than it was back then. So while, I like to fall back on analog years at times, we don't necessarily have to repeat history exactly the same way.
Yeah, it's always different somehow, so it's never quite exact. Anyway, thank you. I know you're in the middle of a conference. Thank you so much for taking some time out to visit with us while you had a little break there in the action. I appreciate that more than you know, and I look forward to talking with you maybe on the other side of harvest, and we'll see what we come up with by then. Chad Hart with us. He, of course, is a professor of economics at Iowa State University. That'll do it for this episode. Thanks again for tuning in. For producer Brianne Hendrickson, I'm Marlin Bohling. We'll catch you next time right here on the Comstock channel. Thanks for joining us on our Comstock YouTube channel. Don't forget, you can also find us on Facebook and TikTok as well. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.